Good afternoon, everyone. This is Daily Trading Analysis with a quick market update for today, Tuesday, 16th of January. After Martin Luther King bank holiday yesterday, the market is back at action. And let me tell you, today is a pretty choppy day, but I think we can have something out of the market in terms of technical analysis and obviously price action. But first, let's see how we did today in terms of fundamental analysis. Consumer inflation expectations on Europe came way lower than the previous one, from 4% to 3.2%. And that will be affecting what the Fed wants to do in the US, because if expectations around the globe are going lower, perhaps the Fed may change the rate cuts moving forward. And the most interesting thing today is the New York Empire State Manufacturing Index that came way lower than expected, minus 43.7 instead of the minus 5 and the minus 14 previous one. Way lower on the manufacturing index means that inflation may be under control, but now the concerns are in the economy. But for now, I think the critical thing for markets to think about is Fed Waller and the Fed's telling us. Fed Waller said today at 11 o'clock, that's when the market started to sell off. Fed Waller said that he thinks the Fed is going to do 3 rate cuts of 25 basis points this year. And this is against the six rate cuts that market is pricing in. So what happened? Well, I told you several times, when the markets don't get what they want, when expectations are not met in both earnings or in Fed rate cuts moving forward, we just go down. That's the thing. This is yesterday's range-bound activity. And if you remember, on Friday, that was Friday. This is yesterday's range bound. This is Friday, also range bound. And the only thing that we got on Thursday last week is this beautiful bounce of the fair value gap that we are now marking as liquidity. So I don't think we are coming back. I was bullish into pre-market today because I don't think we were coming back to this low again. So what we did, well, we had a lot of liquidity up here. So let me just show you the amount of liquidity that we have here. And at some point today, I was pretty bullish watching this liquidity down here. I think this is a zone of support, and I was really patient. I was really patient during pre-market because we were down and down and down and down and down and down. And finally, in this liquidity that I just showed you, look at this dump. So the move down and then the push up. This is a manipulation move. And as you can see, I have a fib retracement here that got respected. That got respected on the golden pocket in here. So I was just waiting for it to go through and show me the cards going to this liquidity. And that's what happened. Look at this. The move down and then the big push up. Why did I take this fair value gap? Because the S&Ps was exactly there. This was the S&Ps at that specific moment, taking this liquidity and pushing. So divergence in between the S&Ps and the Nasdaq was pretty bullish to me. So I just noted the 5-minute fair value gap, this, and the 1-minute this, and I saw this bounce, and I took the first candle making a new high on this one with the stop below the fair value gap for this liquidity. I didn't want to just be greedy and wait for this. I was quite confident, but the first trade of the week for me is not one to be greedy. So 22 points. That's my only trade today. 400 points, $400. And the market kept going. It took liquidity, it took liquidity, and into the open, I was quite hesitant on seeing higher unless we took this one. So we took this liquidity, this basically these relative equal highs that we took right here, and then we took this pre-market. And at 11, the market went just south. This is the 11 candle. Fed Waller speaking, as I mentioned, and we are just holding these sellers are holding this fair value gap, the bearish fair value gap. So we took liquidity both sides, down and up, and the market is not liking what the Fed Waller said, but look at this, it's again pushing higher. So really choppy day. As you can see, the open was really a V reversal into another V reversal into a dump, and now pushing higher. I don't know about you, but dollar is pretty high in the green, 0.68. The 2-year yield is 2.48 today in the green. The 10-year is 3.21. And every single one of these bank stocks, small caps, are in the red. So I have it quite clear today. I took some money off the market and I'm just off. I will close down, and we probably, let's see if tomorrow we can have some more opportunities, because right now the market is just sad. It's not showing progress towards my intention. My bias was bullish. It took the liquidity, it went higher, but the Fed Waller just took it off. So I'm not going to risk it anymore into a power hour move, manipulation move. Perhaps that was pre-market high liquidities. As you can see, this green dashed line, pre-market activity, pre-market high. So we got pre-market lows, we got pre-market highs, and now we are in the middle of everything, 0.14, mixed sentiment in every other market, and a divergence in the dollar and in the yields. So I don't think this is time to just risk it. So I will wait for today to close. I will analyze again my positions and my bias tomorrow, and let's see what happens tomorrow. But for now, my recommendation is just choppy day. If you took some trades, just close it for the day, because I think today it's really not worth. So that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecast, market updates, and market recaps. I appreciate your time as always, and remember that discipline and risk management are key for your success. Stay safe, everyone, and see you tomorrow.